You're listening to the Accenture Insurance Influencers podcast.
I like to say you actually want to be building whatever you're building for a focus group of one, and just make sure you're serving that one ridiculously well. And then you hope that there's other people like that one person you're trying to serve. But really make sure you're serving some needs.
Welcome back to the Accenture Insurance Influencers podcast, where we look at how the industry's vanguards aren't just adapting to change, but creating a dynamic future for themselves. I'm your host, Igrani Yu, and today my guest is Caribou Honig.
I'm the co-founder and chairman of InsureTech Connect, as well as the co-founder of the HR Transform Conference.
Welcome back to the podcast, Caribou.
It's my pleasure. Thanks for having me.
Historically, insurers haven't engaged that much with their customers beyond point of sale and claim if something happens. It seems like a lot of players are trying to change that, and I understand that you have a different view of things, which you explain in terms of dentists and toothbrushes. Can you share this with our listeners?
Yeah, this is probably the best metaphor I've come up with in at least the last couple of years, maybe my whole career. So, look, insurance companies, they look at the banking sector. Right? They look at people checking their bank account, they check their credit card balance, they see what purchases they've made. And, I think there's a little bit of bank envy in that for the insurance companies because they see this level of engagement with the product over in the banking world that looks a lot like a toothbrush. Right? You sort of use it, twice a day. When I wake up, I check my credit card balance. When I just before I go to sleep, I check my checking account, make sure I don't have any overdrafts. Okay, good. I can sleep well tonight. It starts over the next morning. And that is a very high level of engagement for reasons that I think are pretty intuitive. And so you do see, I think, a lot of insurance companies and startups as well asking the question, can we become like that toothbrush? After all, if the banks can, we can too, right? And the question I have is, well, it's not clear to me that that's the right aspiration. It may actually be that the right way for insurance to be as a product and as an industry is much more like the dentist visit. Dentist visits are very, very valuable for sure as well, but it's very different from your daily use of the toothbrush. You go in once every 6 months, right? You sit in a chair. It may not be all that comfortable for an hour, but you get done what's done. You hope there's no cavities to have to worry about. And then you set your appointment for 6 months later. Relatively low engagement, slightly uncomfortable, right? But it gets the job done. And it may be that's actually much more the right model for insurance. That, you go do a quick checkup, make sure you're covered appropriately, hope you don't have any cavities, claims, and, just sort of set an appointment again to check in 6 months and pay your bill. That's fine. It's just not as maybe satisfying as the notion of the high engagement toothbrush. But maybe the real answer is that the industry should aspire to being a great dentist visit rather than a toothbrush. Now I will say the exception to that, if there's going to be a toothbrush model for insurance, my instinct it's going to come out of Internet of Things type of strategies, right? Think about the Apple Watch, right, for monitoring your health for both life, and health insurance kind of issues, or think about, the water monitor embedded in the pipes in your house, right, as a way to, every night it sends you the little text message, your pipes are fine. Like, that actually seems relevant. It may actually be the smart toothbrush, ironically enough. That proves to be an example of insurance actually being more like a toothbrush. Right? There's at least one startup I know that offers a smart toothbrush as part of their dental insurance package. You're like, well, yeah, okay, that's taking it literally, but I guess that would work.
Mm-hmm. And you're not the first one in my reading to say, for example, telematics is very popular right now, and insurers love it because you get all this data, you can personalize the premiums, you can better understand your customer. But at the same time, I've also heard a lot of normal, customers, not insurers, say, I don't want my insurer telling me how to drive. I don't want them to say, hey, you shouldn't be braking so hard. Like it feels like an imposition in some ways. And so I wonder if that's how widely that applies to this toothbrush approach. Like, do people really want their insurer to be involved in their lives? Or, as you say, is there some balance between the toothbrush and the dentist, or somewhere in between?
I think that's right. Yeah, I
Yeah.
think that's exactly right.
Okay, so if we follow this argument to the next level, so if insurers maybe should be looking more into the dentist experience, what does an insurer, our analogy's getting a bit muddy now, what does an insurer need to do to be a really good dentist?
Yeah, well, look, what makes for a good dentist? One is that they're thorough. Another is that they try to minimize the discomfort along the way. Um, and when they do find a cavity, right, they try to really help you navigate your options and take care of it quickly too. Right?
Right.
You come in with you call up your dentist and say, "I've got a toothache. It's a really bad toothache." You don't want to hear your dentist say, "Well, let me send someone over to take a look at it in a week and a half, and they'll take a few pictures of it, and then we'll get around another week or so to figure out how we want to deal with it." Right? And I'm trying, of course, to create a slightly absurd toothache adjustment process there
Yes.
to really kill our metaphor. But you want the dentist to say, "Great, well, not great. Sorry that your tooth is hurting so bad. We'll find a way to work you in today. Come on in." Or even, think about it. I'm going to go really off the rails here. Maybe what the dentist should say is, "Look, you've got a camera in your hand right now. Try to take a couple pictures of it for me, right? And text it over to me. And I can at least give you, in the next 5 minutes, a quick perspective about whether this is something that emergently needs to be seen today, or whether the right answer is, let me get you a little bit of pain, something for the pain, but it can be dealt with in 3 days. It's not quite so critical." There's sort of the broader theme I like around, how do you start to outsource some of the activity in a self-service way to the customer themselves.
Mm-hmm.
And you're starting to see this, maybe not so much in dentistry, in actual dentistry, but you are starting to see this, I think, in interesting parts of InsureTech, right? Especially around the claims process, or even just the data entry process. Like one of the things the internet is great at is enabling companies to source some of the work needed for the product, right, or the application or the claim, to actually go to the consumer, but in a way which actually makes the consumer happier, because they can do it more on their terms, right, on their timeline. I think that's pretty interesting, and I think that's where the world is going here.
Mm-hmm. One thing that strikes me in that description of our insurer/dentist is that there's this increased focus on customer experience recently, and I think a lot of these insurtechs really have customer experience kind of at the core offering, and see that as something that is maybe missing from the traditional insurance experience, which obviously is a huge generalization. So what do you think why is customer experience such a battleground? Like, why is this so important? And why is it such a central feature of the insurtech world?
Yeah, I think of two main areas for it. One is the claims process, right? Because insurance has two parts of its experience, right? Buying the insurance and then getting the claim. And where does customer churn come from? I think it mostly comes from the claim side. Now, I suppose it also comes from the, hey, you can save 15% in 15 minutes. So there's a pricing thing. But, I think a lot of customer churn ends up being the result of dissatisfaction with a claims process, a claims experience. And so thinking about how to make that claims experience fair and transparent and easy for the consumer should reap real dividends in terms of lower churn issues, right? And there's certainly the examples that we seem to keep coming back to Lemonade here around their 15-second claims experience, right?
Mm-hmm.
Or I think about this is one of the things I love about parametric insurance models, which is if you can structure it so there's no such thing as a claims adjuster or a dispute or claims resolution, right? The threshold triggered, you have a drought as measured by the weather satellites on this acre. Therefore, 3 days later, you're going to see this money as the parametric crop insurance in your bank account. Like, there's no claims experience other than receiving money in your bank account. I think that's a pretty good claims experience, if you ask me. So I really think that focusing on the claims customer experience, including structurally, not just the hand-holding aspect of it, has power for customer retention. The other area, though, I think is if you think of customer experience sort of wrapped into product design, not just the what at the extreme, what color palette do you choose for your mobile app, right? But what is the value proposition? What is the product you're offering, right? And how are you structuring the exchange of value? I think about Health IQ as an interesting example, at least in this space. Around they're the folks who at least follow me around the internet, showing me the ads. If you can run a 6-minute mile, which I can't, by the way, but if you can run a 6-minute mile, then we're the life insurance company for you. Like, that's a kind of customer experience wrapped much more in the depth of the value proposition than the color palette, and that's one which I think is clearly pointed at driving positive selection, avoiding adverse selection. I think rolling the customer experience into channel partnerships, right, is another example, right? I'm seeing a lot of activity where startups in particular building out some novel product and then embedding it into the right point of someone else's customer experience. Think about travel insurance, right? This has been around for a while. You're buying your ticket on Expedia, and that's the moment where an insurance company will offer you, right, in partnership with the channel partner, Expedia, the insurance product, right? That's actually very smart thinking about customer experience when they do that. So I think there's both the claims side and there's the sort of positive selection, value proposition aspect of customer experience as well.
Mm-hmm. One sort of argument that I've heard from the incumbent side with that bundling, which when done properly, as you sort of mentioned, can be a really smart customer experience play. I think there's a fear on the incumbent side that it renders the insurer invisible. And that insurance, you see insurance getting bundled with luxury car purchases or like car sharing and these kinds of things. When you start to see the bundling, I think that there's a fear that insurance starts to become invisible, thus exacerbating this sort of customer experience problem. Does that make sense?
It does, but I think it comes down to a question of where is your source of structural advantage? If your source of structural advantage as an insurer is your brand awareness, and the like, then that's a big problem in this context. Then this shift is a threat to that kind of competitive advantage.
Right.
On the other hand, if your competitive advantage is, for instance, we have the best technology stack and APIs for seamlessly integrating our product into channel partnerships, then a world that moves to that embedded insurance model actually favors that insurance provider, right? Because by definition, they have an advantage in that integration.
Mm-hmm. Mm-hmm.
Yeah, I think it can cut both ways.
A similar capability that maybe cuts both ways is data. So I think that incumbents have the benefit of tons of historical data, a really good understanding of historical risk. And we're coming up to a point where maybe that's not sufficient, or maybe there are different ways of doing it. For example, dynamic pricing based on Internet of Things data. I wonder if you can talk about how data is enabling this next generation of insurance technology.
Yeah. And again, I think in some ways it comes down to the claims side. Like claims is where data is coming in most easily, most readily. And I think it's a simpler environment there. If you compare that especially to like bring data into underwriting, you referenced telematics earlier, right? It's really hard, actually. It's a long process to incorporate telematics data into automotive underwriting. Right? Not that there isn't value in it, but it's a different sort of regulatory regime you've got to manage. You may need to rebuild a whole bunch of models in order to incorporate it into underwriting. It invites some regulatory scrutiny, I think. It may not actually be culturally aligned with a sort of traditional actuarial science. There is a in practice distinction between actuarial science and data science, even if there shouldn't be. But if you compare that to like bring some data to look for fraud in the claim side, it's just a lot easier. The learning cycle is much quicker to be able to prove or disprove that some set of data is actually incremental. I think that the regulatory hurdles are a lot less on bringing new data or new sort of data methodologies when you're looking at the claims part of the process. And so I think we're now starting to see more alternative data mainstream into the underwriting side. But I think that actually the tip of the spear has actually, in practice, has been more on the claims side.
Can we talk briefly about blockchain? It seems like it's either the next internet or completely not the next internet. What are you seeing?
So I think blockchain is a very interesting kind of technology. It's interesting in part because ledgers are everywhere. Ledgers are very commonplace. And so any new, really distinctive technology for maintaining a ledger is interesting, right? Remember, like I've got a ledger on my refrigerator, right? And it's actually a shared ledger, right? It's called the grocery list for the Honig family, right? And if you want to add something, you add to it. If you want to cross something out, you can cross it out. It's not distributed. It's a centralized one, right? It's on one refrigerator. There's distributed ledgers of other things people use on Google Docs all the time. There's some benefits of blockchain, but I don't think it's as magical as some of the advocates sort of want to create as an image of it. It's simply got different trade-offs than other types of technologies for maintaining a ledger. And when I've thought about, okay, when would a distributed ledger be the right answer? When would blockchain be the best? I think about two criteria, which both must be true. And if they're both true, then blockchain is really, really interesting. So one is where you have multiple parties basically maintaining their own ledgers of some common information, and where they periodically spend time reconciling their distinct ledgers of that information. If you've got 10 different parties all recording the same basic info on their own company ledgers, and they have to come together once a quarter and spend weeks trying to reconcile them, then that's actually a great place to look into having some sort of probably private distributed ledger, some sort of blockchain. On the other hand, if you've got 10 companies that are maintaining their own ledger, but they never feel like they have to come together and reconcile it, for instance, then I don't know why some sort of distributed version of that ledger is better than a centralized approach like they're doing today. So I just think I think it needs a real framework approach to understand okay, when is it better? When is it not as good? Right? What are the trade-offs? What are the pros and cons compared to maintaining a sticky note on the refrigerator or a Google Doc or an Oracle database?
You're listening to Season 2 of the Accenture Insurance Influencers podcast with host Igrana Yu. To learn more, visit accenture.com/insurance-influencers, where you can find the complete Season 1 and subscribe to get all new episodes. Now, back to the podcast.
Another theme that comes up at InsureTech Connect is this reminder of the human side of insurance. I can't remember your exact wording, but it was basically, it's a technology conference, but at the end of the day, insurance has an effect on people. And I'm curious why you feel compelled to mention that.
Well, I don't know if I've been asked before why I feel compelled to mention that. Isn't it obvious? Look, I feel compelled to mention it because it is so easy at an industry conference, and particularly one that is focused on what's coming and technology and innovation, to lose sight of the big picture, to lose sight of the why that goes beyond just the selfish economic part of the why. I mean, look, I spent nearly a decade at Capital One. Great company in an industry that should exist. Credit cards are actually quite useful, and increasing access to credit is quite useful, and Capital One does that. But like a quarter pounder, right, or the Whopper, whichever comes from McDonald's, it's there can be too much of a good thing. And so you get phrases like, drowning in debt, or being on up to my eyeballs in debt, or being on a debt treadmill. Right. And, really, I guess over the years there, I came to, get a little bit more personal maturity thinking about the implications of those things. And one of the things I like about the insurance industry and getting to play my little role in the insurance industry is that you don't have people talking about, consumers talking about, I'm up to my eyeballs in insurance, or I'm on some sort of insurance treadmill I just can't get off of. Like, it's actually hard to have too much insurance. It's hard for there to be too much of a good thing in the context of insurance. If anything, it's much more, how do we get more people to get the level of protection that's in their own self-interest? Now, there's also, back to the claim side, how do you make sure that claims are being adjudicated fairly and efficiently for people on all sides? So you do get some adversarial aspect of that between the customer and the insurance company. But, look, insurance is actually a really, really valuable thing. And for all the nerdy excitement I get about, APIs and moving insurance to the cloud and blah, 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 right? I also get a real personal satisfaction, and I think everyone involved should get a real personal satisfaction over the good that this industry does for people.
Mm-hmm. And when I was preparing for our conversation, I asked a coworker of mine who has attended ITC, because I have not. And that was actually one of her observations, was that she was, as much as it was a tech conference, she was surprised, happily surprised, to see a lot of discussion of how these new products were helping get insurance to people who were uninsured or underinsured, and how there was quite a human drive to a lot of these companies.
Yeah, look, a lot of technology innovation, a lot of sort of classic quote unquote Silicon Valley is around product innovation and design. And when you're doing good design work and good product development work, you actually need to have the human front and center of your mind. I like to say you actually want to be building whatever you're building for a focus group of one, and just make sure you're serving that one ridiculously well. And then you hope that there's other people like that one person you're trying to serve. But really make sure you're serving some needs of some person. The more you can actually name them, like not abstractly, but, oh yeah, this person I know, I've run across, would get value from this product or from this design.
Mm-hmm. Mm-hmm. Now, on the flip side of that, there was an interesting blog post on the Atlassian blog on talking about ethical design and some of the unintended consequences of something that may start off as fairly benign or as something that aims to do social good. So I wanted to talk a little bit about some of those implications, particularly because it's insurance. Do we run a risk if all these companies are creating what is largely digital products? Does that perhaps favor a more privileged customer? And if you take that sort of to its an almost hopefully absurd consequence, do you end up taking the lower risk people out of the risk pool? And do you end up sort of with this bifurcation of higher risk who are not able to make this choice between sort of a traditional product and maybe a newer product, and these preferred risks who by virtue of their privilege have been able to choose something that offers them a better experience and a better product? Is that a possibility? And is there a responsibility of InsureTech as a whole to make sure that doesn't happen?
Well, that's a small and easy question to answer.
I'm glad.
I may be slightly equipped in that I was a philosophy minor in college, so maybe I can
Okay.
rely on that a little bit. And I've tried to give it a little thought to these kinds of things, but look, I'm no expert in ethics, not by a long shot. Tools are just that; they're tools, right? And how they get used is the consequence of many, many different stakeholders and parties and entities in our society, right? Which is just to say, as a backdrop, like the range of outcomes is very wide, right? And the range of interested parties is very wide as well. Now, when I try to take this to the question of really, I'll call it social implications of insurtech, it's maybe a way to describe it. I find it useful to split that between the underwriting side and the marketing side. And maybe this is, again, because of bringing a little bit of the banking frameworks to bear here. I actually find the underwriting side to be a little easier to get my head around. So I think as a society, we say, or we usually say, we should say, that we're not going to price or make available a product based on something that you can't change about yourself. So what falls easily under that, for instance, is ethnicity. Right. We also add, gender is another one.
Mm-hmm.
We also add, and there's some things which I guess you could change about yourself, but which we say you should never have to. Think religion. And so as a general principle, those things which you can't or shouldn't have to change about yourself, we're not going to underwrite on. But those things which are your choices, which are behavioral, like, do you slam on the brakes hard? Or do you smoke? Or do you take your diabetes medicines? We're much more willing to price against. Right? Genetic factors, another example. I can't really change my genetics.
Mm-hmm.
And so, at least in some cases, you see laws that say, I don't care about all this technology for being able to now that we can read a human genome for so much cheaper than we could 5 years ago, you still can't use it for employer-based health insurance. Right? Now, there's exceptions to these things. Right? Interestingly, in the US at least, we still allow genetics, at least at the federal level, to be used for life insurance underwriting, as I understand it. Right? And we make a distinction of, okay, well, there's some places where it's more pernicious and other places where it's more acceptable. Gender is actually a really interesting one. Developed economies have come to different conclusions about when and where gender can be used for underwriting of auto insurance. Right? In Europe, it is prohibited, point blank. In, I believe, most states, not all, every state in the US, it is permitted. Right? And that's a really interesting set of sort of social policy choices. Right? On the one hand, we like the notion, perhaps, of gender neutrality. On the other hand, when you enforce gender neutrality for auto insurance, it means that in practice, a lot of women are going to be subsidizing the insurance premium of men, right? On average. Now, I like telematics as an example because I like that it allows underwriting based on something that's behavioral, right? If you drive aggressively in a way that creates more risk, you can start to make choices to drive less aggressively.
Mm-hmm.
And so I think about the person who may be actually a very safe driver, but have demographics or other data like credit data about them, which puts them into a more at-risk population. But actually, by letting them, through telematics, prove how safely they drive, right? They can sort of break through the other actuarial data tables. Like I think that's actually very empowering for someone. The marketing side, actually, in some ways, I think is a little bit more subtle. In some ways, is a little bit cleaner cut for me. The benchmark, I think, can't be absolute uniformity of availability, because that's kind of a false benchmark. I think of the benchmark as, well, what's the availability of it today, right? And is making insurance available through your smartphone going to improve that considerably? And I personally live in a comparatively, economically poor area. I live in an area that's probably a banking desert. I can't say for sure that it's an insurance desert, but I suspect so. But I also believe that penetration of smartphones, maybe not the latest iPhone, but of perfectly capable smartphones, is pretty high in my neighborhood. So I actually think that I think and I hope that the availability of sort of digital first insurance distribution, insurance products, actually will go a long way to leveling the playing field across at least economic categories. But this is a complex, real question.
I'm glad you're more of an optimist than I am, Caribou. I think that's probably why you were the VC, and a number of other reasons why I'm not a VC, but definitely more optimistic than I am. So thank you for that.
Let's revisit in 5 years and see who's the better forecaster on that one.
We'll see how it goes. Today, we've been speaking with Caribou Honig, the chairman and co-founder of InsureTech Connect. Thank you very much for taking the time to speak to me, Caribou.
It's been an absolute pleasure.
Thanks for tuning in to Season 2 of the Accenture Insurance Influencers podcast. This season, we're taking a deep dive into some of InsureTech's best-known changemakers, including VCs, startup founders, and thought leaders. We've got a stellar lineup in the pipe, with new episodes released every 2 weeks. In our next episode, we'll reconnect with Ruth Fox-Blader of Anthemis to talk about why scale is so integral for InsureTechs right now. And after that, we'll come back to Caribou Honig to talk about how incumbents and InsureTechs can foster a more resilient and agile industry together. I'm Igrani Yu. Thanks for listening.
To learn more, visit accenture.com/insurance influencers